Are you with me?
Yeah, I'm with you.
Okay. Sorry. Okay. So what we were discussing was ranges, right?
Yes.
Like every candle is a range. So after you made your analysis on what the next candle is to print, mark the high and the low of that candle. If you're expecting market to take out the high of the candle, that's the first objective. So you mark there as your target. And then the low, you can caption is protected, or you can just say previous day low. So what you're expecting market to respect, you mark it out. That's the way you understand it. You can use any inscription, but what you would understand. So that's what in GBP USD, that monthly high. I drew a line there and then call this my monthly targets
Targets.
because I understand that the monthly candle closed bullish and the next month's objective is not to take the low of that monthly candle, but to take the high of the monthly candle. So that was why I named the monthly candle the this is monthly targets. Now, if I want to so if I want to get things cleared well, I will just take this place. This is the low of that candle. Okay, this is the low of that candle, and I can just say it's a protected low. I can tell it to protected low and then call this side my monthly target. That's one thing I can do. A second thing I can do is I can draw a box, but the box will be on the lower time frame. But here, because this is just one candle, I will just draw this. So I know I can call here. So like here now, I can call here protected low. Now, why we call it protected low is so that I'm trying to write it. Are you with me?
I'm with you. Protected low.
Okay, yes. So protected low. One more keywords. Okay. The keyword is there. Okay, so protected low. Now the idea is so that I will know that okay, this is not where market is going, but it is going to the monthly target. You understand? Now
Yeah.
I will now drop down, so we can drop down to the weekly time frame. Market is slow. Okay. So you see now, this is a range. Now a range, let me explain what the range is so you understand. A range is when you get a three candle pattern, I know you understand that a range is from a low to a high of a swing or of swing points. From a swing low and a swing high makes a range. Swing low and a swing high makes a range. Swing low and a swing high makes a range. Now, what is a swing low? A swing low is a candle, one candle with two higher candles. Okay, that's a swing low. This candle, the low of this candle is higher than the low of these two candles beside it, the immediate two candles beside it. You understand?
Yeah.
That's a swing low. This is a swing high. This swing high, why is it a swing high? Because the two immediate highs are lower than it is higher. So when you have a high standing, it's just like, well, let me put it this way. It's just like an eagle. Just take an eagle for an instance. When an eagle stays and then it has two bodyguards, but those two bodyguards are lower than the ranking status of the eagle. Use that logic to understand what a swing high is and what a swing low is. So when you have so this is a swing low. I'm sorry, this is a swing high. This is a swing low because the low of this candle and the low of this candle are higher. This one is lower than it. That's a swing low. For the swing high, the middle candle will be higher. The high of the middle candle will be higher than the high of the immediate candles by its left and its right. That's a swing high. For a swing low, the low of the candle will be lower than the low of the two immediate candles by its left and its right. So this is a swing low, and that is that protected low. So it is a protected place. So no market will not trade below it. Now, this here also is a swing high. Why is it a swing high, Obi?
It's a swing high because the candles before and after it, none of them have reached its height. They are lower than it.
Thank you. So the highs of this candle printed, yes, closed. But this is the high of the candle, and this is the high of the next candle breaking down. So this one is a swing high. So this is a range. So I said a range, you can write it also. A range is a swing high and a swing low. The distance between covered from a swing high to a swing low, that's a range.
Okay.
You understand? You know what a swing low is, you know what a swing high is, right?
Yeah.
Now you know what a range is, right?
Yeah.
Thank you. So what it now means is that for the month, this was our target. And sorry, this is our area of concentration, this range that we just marked out like this now. That's this month of September. This is where our area of concentration is. Okay. So we're expecting market to play inside here and then go out, but not come lower. And you know the reason why, right?
Yes, because it's a swing low. It cannot go beyond it.
No, that's not the reason. Why are we expecting markets to trade to this side and not to this side?
Because based on the previous candle, it's close
Mhm.
within the range of the previous candle, which means the next candle should close above it.
No,
Ah,
that's really not it. That's because in the monthly time frame, you remember when you're doing anything, you're doing with the monthly time frame idea. This is now the weekly time frame. Can you see it? One
yes,
week.
yes, I can
Yeah,
see it.
that's the weekly time frame. We started our analysis from the monthly time frame, and this is the logic in the monthly time frame. This is the month of August. August closed, took out the low of July, and then closed bullish. So we're expecting September not to trade to take out the low of August, but to take out the
High of high of September, high of August.
High of August. Yes, and you understand the reason based on we've gone past this stage, so I expect you to know why.
Yes.
Mhm. So what that means is that's why I marked this side. This is the low of August, the low of this candle, this low of this candle August. So that was why I said it is protected, meaning I'm not expecting market to trade and take out that low, but I'm expecting it to trade and take out the high. And that was why I used monthly targets. I said monthly targets. Let me broaden this a little so you can see it. So I said monthly targets, and I named the high of this candle monthly targets, and then the low protected low. So what this will help me do is that when I am checking the lower time frame, it will help me know that okay, oh, this month ultimately should be bullish, and the first agenda should be to take the high and not to take the low. So anything it will be doing, like to trade lower, I know that that is just a retracement for it to make the bullish movement. Do
Uh,
you understand?
yes, sir.
Now, so when you come down from the monthly time frame to the weekly time frame, you will now see the swing structure. And this swing structure will be seen very well on the daily time frame. Now, so this is now the swing, and our attention is inside here from this place to this place. This is August. This is August. This is August. This is September. So from here, so without looking at this September, let's say September candles hasn't printed. We're just 2 weeks into September. Let's say the two candles hasn't printed in September, and we just had here. Our attention was from here to here. So inside this September that is coming now, I know that okay, I know that markets will probably come low to make the low of the month, and then it will continue higher. But it will not take out this side, but rather it will take out this side. That's the objective. So that's why I put here as monthly targets. Now remember our time frame pairing, we said 1 month, monthly, and you go to the daily for structure, right? That's
Yes.
the intermediate time frames. Yes. Now, so we've seen what is the weekly, and this is the range that we're doing. Now, if we go to the daily, we go to the daily, this is what you will see in the daily. Now, remember, we're talking about PD arrays. This I thank God for this chart. Well, it's all over the charts. It's just for you to observe it. So this is the swing low, and a swing high, another swing low, swing high. But then this is the major swing low and swing high that we had. So it was this range that we were dealing with. So we're expecting market to trade inside this range, and we're expecting it to come low to make the low of the month, then trade high. And it should not take out this side, but it should take out this side. So now, with this close already here, we know that okay, this thing wants to make the low of the month. Okay. But the next question would have been, how far will it reach? Firstly, we already know that okay, it will not take out this side, but it is coming low. But how far low do we want it to go? So we mark out 50% of the range. You take this thing and then you mark from here to this point. Okay, you can see it, right?
The range. Yes.
Yes, this thing I just marked the hand. Now, so this is 50% here that you're seeing this line and this fixed line. That's 50%.
I
From
got,
here to here is 50%. You can see it, right?
yeah.
50% of this place. So this one came, but it did not reach 50% of it. And ideally, I'm expecting 50%. Now, sometimes market does not reach 50%, but most of the time it does. And in trading, your plan is to be to get as much confluence as you can. It's better for you allow it when everything click well and you dey sure you move. You understand?
Yeah.
It's the less you trade with maybe the more you eliminate maybe in your trading, the better it gets for you. Just do those ones that you when it does that one that you're sure of, yeah, you fly with it. So market came, it came close to it. It did not reach the 50%, but it went up. And then it now came down again to this FVG. And this FVG is in the 50%, is below the 50% of this range. Now, this is where the pre-PD array stuff comes in play. Let me now write it so you get what we're discussing PD array. I just pre If you understand this PD area, I'll be glad. I know we've eliminated something again because sometimes when we come to class, we spend time on the things we've talked already. So we call keyboard on that. We call this premium. Okay. So this premium. So from 50% up is premium, and then 50% down is
Is
discount.
discount.
Yes. And if you use you're an art student, so somehow you would have done you would have done did you do economics?
Yes.
Okay. So you would understand the logic here if you did economics. I don't know if you're getting if you understand the point I'm driving at with this thing I just explained now.
The premium and discount. Hello?
Uh,
Yes, I understand now. You are talking about once the range is marked
yeah,
out
like
within the box, then you divide the box into two. That is the
yeah,
50%. And then either depending
mm,
on the market structure, if the market goes about below or above the 50%, it is a likely sign that the market is about to reverse or go up.
yes. Okay. So this area from 50% down, discount from 50% up, premium. Now this then we now have premium and discount arrays. Premium and discount arrays. You can say price delivery array. So when you say premium and discount arrays, it clicks well, understanding that premium. And this is what happens. When price is at premium of a range, it goes down, it trades down. Your idea is as a seller, if you want to sell something for someone, because you want to make gain, you will sell that thing at a high price, right?
Yeah,
That's why they do all these demand and supply stuff. When something is scarce,
they sell it higher. The
uh,
price is higher.
it goes up. Yes, the price goes up. And when the price goes up, people start
Yeah,
selling themselves. Marketers sell. This time they make money. Now, if price comes into discounts, discount sales, everybody buyers, what they do?
they'll start
Buyers,
buying.
thank you. So just get that idea. When price is at premium, the likely thing that will happen is they sell.
So,
Yes, we is a sell. And when price is at discounts, it will buy. That's that logic. Remember, what we're doing here is this is markets. You understand?
yeah,
This is a market, and these things that we're doing are trading. We're trading money. Now, these are all money is even minute. There are big players in the market that are actually making these moves. And we have economists, we have people that specialize in this field, read even to masters and all the rest of that, that are doing this professionally even more than what we're doing. We are on just to make money. With this thing here, people move the markets, move the countries and all the rest of that. The economy of the country, you can tell them by what you're seeing here. So the players here is not just the immediate or immediately not just look market. Ours, the best thing we do is just the footprints. We use the footprints to understand and to make the projections. But it is these economic factors that they use also the ideas of these economic factors that they use in driving the market. So when price is at a premium, it sells. When price is at a discount, it buys. So since I knew that we were bullish for the month, I'm now putting these things together. If you can flow with this thing like this, everything we just said, fine. Since we are moving to the monthly targets, which is a bullish move, I would expect market to trade down to the discount of this place so that people that are buying will buy at a good rate and make profits. That's the idea of the market, making profits. So it has come down and came down to this below the 50%. So that was a good place to buy from. So the market bought from that side and it's going up now. It's still continuing this bullish movement. So watch out for what happened here. When I said premium and discounts arrays, premium and discount arrays, those arrays are key levels in the premium and discounts where market is likely to make a move from. Now, those arrays are, sorry, we have the order block, we have the fair value gap, we have the breaker block, we have the rejection block.
Hmm.
Now, let
Uh,
me write them out.
all these things you mentioned are inside premium and discount.
Yeah, those are likely things. They are likely areas, yes, that you will see inside there. No fear, you will see them here now.
Breaker
So,
block, order block, rejection block.
yeah. So we have rejection block. I don't forget my keyboard on by. Zoom on the screen. So we have rejection block. We have order block. We have a breaker block. We have mitigation block. We have fair value gap. I don't think I'm missing any. One, two, three, four, 5. Yes.
What of rejection block? Is it the same thing as mitigation?
Which one?
You said something about rejection block.
Yes, there's rejection block. This is rejection block.
Okay, okay, okay,
Order
okay.
block.
Something was covering. I've seen it.
So now in this order, that's how it forms premium array. Now for the discount, it will be the reverse of this. You probably have a rejection block last, order block next, breaker block, mitigation block, fair value gap up, like that. Now let me keep it here. For want of time, I don't know, but you're recording it, so just
I can't hear you again.